I'm Corbett Wall with DV Auction, here with your feeder flash for Thursday, April the 9th. We've got extending oversight being done by USDA. That was the big news on Wednesday, is that the Secretary of Agriculture, Sonny Perdue, sent out a tweet saying that they are going to explore the causes, or continue to explore the causes of divergence between box and live beef prices, beginning with the Holcomb fire and now with COVID-19. So the investigation that they were doing, and we've been waiting on the results of that from the Holcomb fire, and the big run up in the box beef prices, and fat cattle were lower, and giant, huge profits made by your packers. And then we saw that happen again with this virus crisis here. But that just kind of made everybody feel good that the word is getting to Washington, D.C. about what's happening to cattle people out here. And there's never been another better time to try to get something done. And so we've got some things that we're pushing. One is going to be the CARES Act, which allows for $9.5 billion. I think I said million the other day, but $9.5 billion to go to livestock producers. If you listen to Brian Winter, and he's got a big voice. I tell you, the Winter family has always been a big voice for many decades. Throughout the midsection of the United States, they're auction owners, and they've got several livestock auctions: Dodge City, Pratt, Lahana, Colorado, Riverton, Wyoming, and on his Facebook, Brian Winter talks about his idea, their idea for the CARES Act, and everybody's kind of wondering how they're going to dole that money out. And what he was saying on his feed was, we need to get it out as soon as possible, $200 to $300 per head for producers that have proof that they own cattle between February 15th and June 20th of this year. And so that would be a big help out there. I know our cattle people don't like handouts, but I mean, they've never been raped as bad as they've gotten done on this coronavirus crisis here. And so many of them just won't be able to pay their loans. They won't be able to hold things together if they don't get some kind of help here. But we've got to also address some things that are going to help us going forward from this point. And we've got to change this broken system. And I've told you guys several times that I've been involved with a group, and over the series of conference calls, there's been a lot of us, a lot of big feeders on there, a lot of big voices on there, but we are looking to push something, and we're going to need your guys' help. We're going to need your help to call your congressmen, to get in your associations that you're involved with, and get them to make it policy and have a big push to have a minimum level of negotiated cash sales from your packers, and we've landed on 30% negotiated cash minimum mandated, and you guys say, well, why don't we go bigger than that? Why don't we say it all has to be that? Why don't we say 50? We can't change it all, guys. We think we can get this. So, you know, why do we not do 50? Well, because there is a big contingent of corporate packers. You know, we're not looking to push those guys out of business or make them change the way that they do things. You know, a lot of them have purchased the feedlots that used to be packer owned. We don't have a lot of packer ownership cattle now. They've shifted that. They've sold those feedlots. They're still getting the cattle. I mean, that was part of the deal. They want their captive supplies, but these big corporate feeders, they got to live too. We don't necessarily want to step on their toes. You know, they're probably making up somewhere, depending on the week, around 60% of the volume of feedlot sales, and they're all going to be, for the most part, formulated contract deals. So that leaves the rest of us. So you want to have, if we can get 30% mandated minimum negotiated cash sales going to your packers, then that leaves a little bit of wiggle room for some guys that want to do their own thing, if they want to grid those cattle, if they've got a program that they want to put on, or the like. But we've got to get some competition back in this fed cattle arena. And so what we're pushing here, and it's going to be, we're going to be using U.S. Cattlemen's Association to push this. They know what hoops they got to jump through to get them there. We're thinking that we can attach this to the reauthorization of MPR, or mandatory price reporting, and that would be the place that it would get enforced, or we'd be able to see if they've got what they, if they've met that level or not. But it's a lot more aggressive than some of you guys up in the Midwest think. We're wanting 30% per packer facility. Now that's pretty aggressive. When you look down in the Texas Panhandle and they're running somewhere around 7% negotiated cash, to go to 30, that's a ton. And to do it per processing facility, that is huge. And the processing facility threshold is those that have to report their sales twice a day, each business day, to the USDA through mandatory price reporting. So if we can get that pushed through, I know it would be easier up in Iowa because they're running close to 50% already in that region. Nebraska's running in the 30s somewhere. But if we can get all of them, I mean, even you guys out west and you guys back east, but your bigger packing facilities, make them purchase 30% minimum negotiated cash sales on a 14-day or less delivery. That would bring so much competition back into the market. When the fundamentals come back into play, that would cause them to get in there and have to require some sort of competition for these cattle. So whenever your cattlemen deserve a little bit more money, they should be able to negotiate that themselves. And you know, the markets are still going to go up and down, but we've got to have some kind of leverage back in this deal. But we're going to get the language out here in the next day or two. We've got a lot of backing from a lot of state cattlemen's organizations. We've got, you know, Nebraska, we've got Iowa. We should be able to get several more, including Missouri, Kentucky, a lot of your cow-calf states to throw in with us. And I'm going to be putting a list together of organizations, cattlemen's organizations, that are going to get behind this deal and push. We're all going to push at the same time in the same direction. We're going to leave the egos at the door. We're not going to claim you know, responsibility or get the credit for any one organization, because it's going to be a group effort. And I want you guys to get behind this, and I'll be coming with you in you know, as we go forward here with the feeder flash. Going to kind of try to keep you guys up to date on this deal. But it's 30-14, 30% minimum cash, and within a 14-day delivery. I think it could save the industry. It'll help everybody all the way down to your cow-calf guy. And if we don't do this now, if we don't get something done now, we're going to continue vertical integration, and we're going to completely lose all of our trade. And then we're going to lose competition. It's eventually going to trickle down into your yearlings, into your calves, because your backgrounders won't be able to pay the kind of money that they've been paying for calves. And it could really, really help things. It could even help your futures market, because it's going to make that live price that's so important. It's going to make it so much stronger and have so much tied to it that whenever you do have convergence there, whenever your contracts mature, that it will help that too. But we've really got to get behind this, guys, and I believe in it, full faith there, and I want you guys to get excited about it too. Let's look at the board on Wednesday. April live cattle futures up $4.50 again for the second day in a row here. $4.50 limit at $92.82. Still quite a bit of basis, still lagging quite a bit behind the cash market. But your June was up $1.87. I think this is the healthiest board day we've had for a while. Hasn't been really swaying to and fro, just showed some support that we can see the light at the end of the tunnel on this coronavirus deal, and that we're going to have demand for beef as we go forward. But June was up $1.87, 86.67. April feeder cattle up $4.95. It could have went up $6.75, but a strong gain there of nearly $5 on your spot April at $119.87, and it actually has surpassed what your index levels are now. So that gives us a lot of enthusiasm going forward here. May feeder cattle contracts up $5.57 at $119.37. Your fat cattle trade continued to trade at that 105, and I told you on the last visit that I was encouraged at the 105 because you would have thought the way the board was in that huge basis that we had that they may have wanted to back things up to maybe $1 or even maybe a sub $1, but I think that the 105 was kind of a gift by the packers to try to give a weighted average figure that's going to be used on these formulas to keep your formula sellers from having a complete uprising there if they went any lower than that. But that's still $7 lower than the bulk of the trade last week, but they continued to give 105 for the most part live. And really, for the way things are, for the crisis that we've been in, it could be considered a quote-unquote fair price for the way things are, but we've got to start gaining some ground from here forward. But you look at confirmed sales on Wednesday in Iowa, about 3,000 head at 105, and 168's the dress market. Nebraska, about 3,600 head. They did have a spread there, a few sales, 103.5 to 105, and 168 dress there. Kansas, about 3,400 head, and Texas, 2,600 head, all at the 105. Like I said, $7 lower than the bulk of the trade last week, $7 to $12 lower on a dress basis, but still, when you're working with a spot futures market that's still under 93 with 2 days in a row of up the extended limit, we really can't complain because we just aren't in a position where we can complain. And if we get this 30-14 deal done, then we can get competition back in the market and maybe save the industry without stepping on the toes of the guys that are completely formulated and leave a little bit of wiggle room for guys to do what they want to do. Box beef cutout values sharply lower. And it kind of doesn't make a lot of sense. I think it's mostly due to logistics because of our freight and different problems getting things moved through. We've still got a lot of plants running down at just a fraction of what they can do due to labor problems and things, and some of them are completely shut down, especially when you move to the upper Midwest and going back east there. But we've still got bare shelves out there for these retailers, but they're just they're not wanting to come in and pay those kind of prices, and these packers might have to give up a little bit of their profit margin, heaven forbid here. But let's look at the choice cutouts on Wednesday afternoon. 220, 234, down $5.54. Your select was 211.77, down $5.98. Now, I wouldn't be surprised if those didn't come back a little bit here late in the week, but that's a choice select spread of $10.57, and again, a pretty decent movement for a one-day deal of 145 loads of cuts, grinds, and trimmings. We've had pretty good movement on boxes the first 3 days of this week, and but the prices continued to fall hard, and maybe that's what the packers had to do to move that kind of volume. But let's look at your slaughter, which continues to fail. As we've spread those workers out, it's slowed production, and as we go further on, week to date, we're just going to see a big gap here. But 318,000 through Wednesday, that's 34,000 head less than the same time last week, and 45,000 less than the same week a year ago. So look at your feeder cattle markets. Your real-time index on DV auction ended the day on Wednesday at 115.79. We didn't get that recharge back in as our markets are continue to fall, but there was some demand at the lower levels, so we've just got to hope that we can the feeders will come in at some point. As the fat board keeps going up like this, at some point they'll get to the level where they can buy some cattle and feel comfortable hedging those cattle and come back into the market full faith. But 115.79, down $1.32 compared to late Tuesday. Your steer tracker, your last 25 bunches of index cattle there through DV Auctions automated reporting service called Cattle Market Central at 117.94. Your CME cash feeder cattle index, the latest available, was 116.79. Look at your big sales. OKC West, El Reno, Oklahoma, 4,600 head there and 3,500 head plus feeder cattle on Wednesday. Your feeder steers $1 to $4 lower, but feeder heifers $2 to $4 higher. as you see your buyers, and they're heavily influenced by your corporate buyers there, they're looking for something that will hedge. So they're looking at other options. They're coming into the heifer market thinking that they can buy some of those heifers and allow those to hedge and cover themselves as they're feeding forward. And you can't blame them. As volatile as this deal is anymore, you've got to stay hedged up pretty good. Your calves on Tuesday, only about 1,000 head there. Not a very good test on anything, but steady and a light test. Dodge City, Kansas, winter livestock auction. I talked about them earlier with Brian Winter and the push he's got on the CARES Act deal. But Dodge City, Kansas, a lighter run for them, about half what they would normally have this time of year, but 2,200 head there. Remember, they were sharply lower last week. This week, feeder steers $4 to $6 higher, and feeder heifers $6 to $8 higher. Your steer calves, they didn't really have enough of them to get a good test. Heifer calves $3 to $5 higher. But I want you to look at the slaughter cows. We have lost literally 40 to 50 bucks in the meat from your cow packer bids, and in the meat there, and it's translated to huge losses standing in the ring on a live basis. But slaughter cows in Dodge City, $4 to $6 lower. That's on top of the $16 to $20 lower that they had last week. So, I mean, if you didn't hit that real sweet spot right at the start of this virus to sell your cows when it run up big there because they were taking all the ground beef off the shelves, if you didn't get in early on that deal, you absolutely missed the boat. And I know it's too late to say that now, but it's just amazing how fast that can go up and down on your cow bids there. Look at some other individual quotes. Huss Livestock Market in Kearney, Nebraska had a big quote on some light calves. 57 head, 576 pound steer calves, 168.50. You think, well, I'm going to go out east and buy some shipped in calves out of the southeast. Well, they're not all one at a time down there. Some of your sales down there feature big bunches, and your southeastern producers and backgrounders are trying to add value by putting more weight and bunching those cattle up there. One of the big stockyards that they do that was Hardin County Stockyards in Savannah, Tennessee. They've got a good market down there, and there'd be a lot of freight on these calves, and they'd be crossed up some, but plenty good enough to turn out for grass this summer. But 77 head, 563 pound steers in Savannah, Tennessee at 146.50. Your biggest quote that I saw for Wednesday come out of Stockman's Livestock Market, Yankton, South Dakota. They sell feeder cattle too, not just their big fat cattle auction that they get all the attention from, but they sell feeders plenty high. And look at these yearling feeders here. 75 head, 814 pound steers at 127. And that's your feeder flash for Thursday.